Bloomberg Audio Studios. Podcasts, radio, news.
It's Thursday. I'm not going to the JP Morgan pub this Thursday.
Okay, how was it last week?
I was fun.
I saw you were up on the roof.
We went to the roof. It was pretty cool. Like the very top part is like this obelisk into the sky. So we were gazing up at it and it was all lit up. It was so cool.
Did
it was
climb the obelisk like King Kong.
God, I wanted to like free solo it.
Yeah.
But it was so cold.
Yeah.
It was so
Not the best
windy.
day to be on JP Morgan's rooftop.
It was so snowy and icy. I was pretty terrified. It was totally safe.
Was there a fence?
There was a fence.
Okay.
There was a fence.
Is there a helipad?
I'm sure there is, but I didn't.
You were on the roof.
I was.
Because
But
the helicopter
it was like
would
a quick,
get impaled on the obelisk.
a quick lookout. You know, I waved to New Jersey. Then we got back in.
Saluted New Jersey.
God, it was so cool though.
Yeah.
We have to go.
We do have to
We
go.
really have to go.
We did, after talking about this, get some email invites being like, come.
Yeah.
So
we need to take
we'll work it
up
out.
one of them.
Yeah.
Is there anything you got?
I'm off the week after next,
Yeah. Oh my God. Wait, what week are you off?
the 16th.
Yikes. I'm off the week after that.
Sweet. 2 weeks off. It's like very satisfying to have the end in sight, you know?
Yeah. No, I feel that.
Now, of course, I live for my work and we'll be
Of
missing.
course. Where are you going? I mean, we can talk about this later.
I'll tell you off mic.
Cool.
I'm going somewhere warm.
I'm going somewhere cold.
Nice.
Yeah. All right.
Hello and welcome to the Money Stuff Podcast, your weekly podcast where we talk about stuff related to money. I'm Matt Levine and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television.
We had it under the wire last week that that SpaceX and XAI were merging.
We were ahead of the curve so slightly.
We were somewhere near the
We
curve.
were like on the curve.
We were on the curve.
I was going to say we're picking
Now
up
we're kind of behind the curve.
We're a little bit. We're picking up where we left off, though.
Yes.
And that is on, it happened. SpaceX.
It happened. This is the thing. I come from the world of public company mergers where like you negotiate a deal for a few weeks and you sign a deal and then you announce the deal and then like 6 months later it closes. And like Elon Musk has done that. He did the Twitter merger, which took at least 40 years off my life.
Ooh.
But when he decides to merge XAI and SpaceX, like from a glimmer in his eye to the deal is closed is like, I don't know, what, 4 days? Like,
Yeah.
It's really incredible speed.
Well, as you sort of lay out in the newsletter, he's negotiating with himself and then signing it himself.
Yeah, it's
in a
great.
sense.
It'll be interesting to learn from the eventual IPO filing. I don't know how much of these companies Elon Musk owns, right? But he's not the sole shareholder of either one, right? There's a lot of employees, there's outside investors, but it seems like he owns at least a majority of both companies, or at least the majority of the voting power of both companies, because he could just kind of do the merger himself. He's the controlling executive of both. He controls the board of both, and he's most importantly the controlling shareholder of both. So like when the deal is submitted to a shareholder vote, it's submitted to him and he says yes. And so you can just do it really fast. In addition to him being legally the controlling shareholder, also like all of the shareholders both love him and fear him. My sense is this is true. You can imagine some SpaceX shareholders saying, SpaceX is a very valuable company. It is worth more than 4 times as much as XAI. They say it's a $1.25 trillion valuation for the combined company, $1 trillion for SpaceX and $250 billion for XAI. Those numbers are kind of fake because no money is changing hands. So there's no actual dollar value, right? Those numbers are like kind of in the ballpark of what other transactions have valued them at, but this doesn't, it's whatever he wants. But the proportion matters, right? Like if you say SpaceX is a $1 trillion company and XAI is a $1 trillion company, then XAI gets half the company. If you say, what they said, then XAI gets 20% of the company. And you can imagine a SpaceX shareholder, like say an employee or former employee saying, that's not right. Like SpaceX is good. I like SpaceX. I don't like XAI, which is, to some extent the successor of Twitter, and being mad about the deal price, but like there's nothing they can do. Nothing they can do at all. I wrote that this is made easier by the fact that they are private companies.
Yes.
All of Elon Musk's companies either were formed in or have kind of moved to Texas. So they're incorporated in Texas. And nobody really knows what exactly what happened if these were Texas public companies. But Texas does allow you to kind of prevent small shareholders from bringing derivative lawsuits. So there's some chance that he could do this kind of stuff even with two public companies, right? There's some chance. He could, when he merges Tesla and SpaceX.
Yeah, then we'll
there's
find
some
out.
chance that like no one will be able to say anything about it. We'll see.
I was going to say, I wish we were about to find out in this case, if one of them was public, but it's a good point that eventually when we do finally reach the convergence and SpaceX and Tesla merge.
It's going to ruin.
It's going to ruin
a vacation of mine. I wonder if it's the one in 2 weeks. But yeah, it's going to be great.
Yeah. I also like the point made in here that, the narrative has been that SpaceX is going to fund building data centers in space, or it's going to fund XAI in some form. But it's pointed out that SpaceX generated around $15 billion in revenue last year. This is a point made by Martin Pierce. It's more about the fundraising ability of SpaceX.
Yeah, SpaceX is a self-funding company. Right. SpaceX has done recent employee tenders where the company itself has used its free cash flow to buy stock back from employees. And so why does SpaceX need to go public? Well, maybe they have like some vast new rocket program that they need to fund, but like really it's to fund data centers in space, right? They don't necessarily need public money to shoot rockets into space. They need it to sweep XAI. This is like
to
a little
keep
bit of
stuff in space.
Like it probably makes sense from a corporate finance perspective for SpaceX to be public, but like it really helps to raise money for XAI or for AI type activities or data centers in space. And so this is a way for Elon Musk to take the somehow even more capital intensive business than shooting rockets into space and sweeping it into a fundraising juggernaut.
It is amazing to me how many people, and ourselves included kind of, are saying data centers in space with a straight face. Orbital data centers is also a phrase that I've heard.
Yeah. A lot of people are very, very skeptical about the idea of putting AI data centers in space.
Well, I keep just thinking about where else can we put data centers? Why do they have to go in space? Would the ocean be easier in terms of weird frontiers where we could put data centers? Like, how did we land on space as a realistic option?
I don't know that anyone's landed on it as a realistic option, but Elon Musk really likes science fiction.
For sure.
And he references this actually in the SpaceX XAI merger announcement. There's a notion that there are some civilizations that harness energy from their planet. Katie looks so tired.
No, I'm here.
There are some civilizations that can harness some large proportion of the energy on their planet. But then there are the better civilizations that can harness most of the energy of the star they orbit. And then there are even better ones.
Like the sun?
Yeah. And then there are even better civilizations that can harness whole galaxies of energy. And so if you have all of the energy of the sun at your disposal, you can travel between galaxies or whatever. And so
God.
It sounds so stupid when I said it. But Elon Musk's, one of his main dreams is to harness all of the energy of the sun. And to do that, you put you put a shell of satellites around the sun that take all of the energy from the sun so that they run the data centers. So a little beam of light gets through so that we can live on Earth, and then the rest of the sun's energy goes to the data centers. So Elon Musk can be the data centers are harnessing the power of the sun.
This is honest to God the first time I've ever heard of this.
Yeah. I learned of it from the announcement that references the Russian scientists who came up with these tiers of civilizations, and then I read a portion of his Wikipedia page, and now I'm telling you, and you're weeping.
Well, the thing is, I'm feeling really sick. I'm brewing something right now. I'm also reading this really trippy garbage, magic / science fiction book right now. And I'm at the point, I'm 81% of the way through it. So I'm going to finish it, but it's basically just kind of garbage you just threw at me right now. And it's you
read this magic sci-fi garbage and then you come into work and it's more of it.
I feel like I'm dissociating. Am I on the path
we all
reading
feel
my Kindle?
Like that. We all feel like that. But anyway, that's why.
Anyway, thank you for walking me through that. If I had just realized we're trying to harness the energy of the sun.
So at a grand sci-fi level, that's the intention. In terms of will the data centers work? No one knows.
Yeah.
It's fine, whatever. You know who I want to spend a minute talking about?
Who?
Twitter's bondholders.
Yeah.
Do you remember when people like me were man, what a bad deal to agree to fund Elon's Twitter buyout with debt that like now trades that back then traded like 40 cents on the dollar.
What a short-sighted thing to say.
Now, if Twitter needs to pay back like $13 billion of debt, like
no sweat.
Like that's like 1 minute of fundraising for Twitter, which is now called SpaceX.
So quaint.
Anyway, everyone always wins.
Everyone always wins.
Yeah. I read about this a little bit this week too. The SpaceX IPO team are working on changing the rules for index eligibility so that SpaceX can be put into at least some big stock indexes earlier than like normally for like the NASDAQ 100 or the S&P.
It's like 3 months.
Yeah, it's like some period of months. And they want it to be fast. They're going to be in the business in the next year of moving an enormous amount of stock from like early SpaceX investors to index funds.
Yeah.
And they want to move that stock efficiently.
It makes a lot of sense.
It does. They can't really fault it.
I will say it's interesting that like SpaceX in terms of private companies is kind of in a league of its own. Like
sort of. Like it's becoming more of a thing, right? I mean, one reason that it seems like they're having traction with like the index companies is there's a backlog behind them of other multi-$100 billion companies that everyone wants to own. And it's like, yeah, this should be in the index as soon as they can.
Well, part of the reason I say this, it relates back to ETFs. Don't worry.
Sure.
Barron Capital, which is a firm founded by Ron Barron, who is like a longtime Elon Musk investor. He loves Elon Musk companies. They recently launched an ETF. The ticker is RONB, which I love. And they own a pretty sizable chunk of SpaceX in the ETF. The number of shares that they hold stays static, but as the asset levels of the funds go around, some days it'll be like 22% of the fund, some days it'll be 11% of the fund, which is interesting because the SEC has a 15% cap on illiquid assets for ETFs. But the company confirmed that they classify it as less liquid. There's 4 liquidity tiers. Highly liquid, moderately less liquid, and then illiquid. But SpaceX, for their purposes, by their definition, is less liquid.
I bet they can move SpaceX pretty quick.
Yeah, that's the thing. That's kind of what I mean. It's in like a league of its own. It's a private company, but it's pretty liquid, and it makes sense that
everyone's paying attention to it, and it's like everyone knows this IPO is coming.
Yeah.
Should we talk about DATs?
Yeah. I was wondering when we were going to talk about closed-end fund activism again. It's been a while.
Has it? Have we talked about closed-end fund activism on this podcast?
Think about the dawn of this podcast.
Oh, yeah. Okay.
I don't know if we just talked about it a lot in pretend podcasts, but I'm pretty sure we talked about it on real podcasts.
You and I have talked in front of microphones about closed-end funds and closed-end fund activism. Closed-end fund activism is when, I guess we've talked about the Bill Ackman closed-end fund that never was.
Come on. We've definitely talked about Boaz Weinstein on this podcast.
About Boaz Weinstein.
Friend of the pod.
A leading closed-end fund activist. Closed-end fund activism is like, you have a closed-end fund, which is a company that buys investments and also lists its own shares on the public stock market. And like sometimes a closed-end fund, the fund's own shares will trade at a discount to the net asset value. And then some activists will buy up some shares and run a proxy fight and try to kick out the management of the fund so that they can liquidate the fund, sell all the underlying stuff at net asset value and like return money to the shareholders and capture that discount. This is a thing, it's like controversial. Boaz gets yelled at by BlackRock or whoever. Sometimes activists win, sometimes they lose. Sometimes the underlying fund managers make the case that there's actually some long-term value and that it is short-sighted to liquidate the fund and capture the discount. Sometimes that case doesn't work. Anyway, DATs. Digital asset treasury companies were all the rage last year, led by Strategy, formerly MicroStrategy, which is, a huge pot of Bitcoins.
Which reports earnings.
I know. We got to talk about Strategy too, but let's talk about activism first. All these companies were formed that would buy crypto, like Bitcoin or, different companies specialize in different things. And they would have a big pot of crypto and it would trade at like a huge premium to the net asset value. And so everyone did this trade like in summer of last year. And then it collapsed. Like the prices came down, but also the premiums collapsed. So now a lot of these DATs are trading at discounts to net asset value. And so now you're starting to see glimmers of activism against DATs where someone will be like, I can buy stock in this pot of Bitcoin and the stock trades at like 80% of net asset value. So if I pay 80 cents, I can get $1 worth of Bitcoin. And the only problem is I got to crack open the pot and take out the Bitcoin. And so you do things like pressure the management to do buybacks, or maybe you launch a proxy fight. We haven't seen proxy fights yet, but like we've seen activist filings, and the proxy fights will be so good because if you run a digital asset treasury company, like you're kind of, a colorful character. And if you're taking a run at them as an activist, you're probably kind of a colorful character too. And so there'll be some good proxy fights.
I have 2 things, maybe 3. I think this is really fun, like the concept of bringing the closed-end fund activism playbook to crypto, because I feel like crypto market structure and equity market structure, they blend together in some ways, or at least parallel each other. And this is just another way.
Well, but this is, to be clear, just equity. These are companies with stocks. And in fact, like the controversy is that a lot of digital asset treasury companies will say, no, we're not a closed-end fund. We're an operating business. We're creating a lot of value. For you to just take our crypto and liquidate it to capture the discount is totally destructive of long-term value. And then other people are like, no, you're a pot of Bitcoins. Come on.
Yeah.
So we'll see who wins that argument.
Well, for index classification purposes,
sure.
they have to be operating businesses.
Yeah. They argue that they're operating businesses. And so far, they have more or less won with the index classifiers.
The other thing,
disagree.
You with the might of the pen.
Yeah, exactly.
A swipe of the keyboard. The other thing is this brought back just a myriad of memories of the Grayscale Bitcoin Trust.
Yeah, sure.
Because that did operate as a closed-end fund. And they were so eager to convert it to an ETF so they could get rid of their discount.
Yeah, and they had weirder governance. And so you couldn't like just do a proxy fight, but like people were mad at them for not closing the discount earlier. And then they did, in fact, want to convert to an ETF, and then they did. I know that your next sentence will be, these DATs should convert to ETFs, but I disagree and they disagree. So.
Yeah.
So I'm very excited for like a wave of this. In part because like one thing that is happening is the price of Bitcoin is collapsing.
Oh my God.
The premiums of these DATs are collapsing. And today, Thursday, February 5th, Strategy was at least at some point trading below net asset value.
I mean, I think their break even or whatever you want to call it is $76,000 per Bitcoin or about there.
Well, there's 2 things. There's like their cost basis.
Yes.
Which like if they trade below their cost basis, then arguably their Bitcoin buying has been money losing, right?
Yeah. And they've been here before.
Yeah. And like they're a proxy for Bitcoin. So that's fine. Like if Bitcoin goes down, like they'll go down. But the other thing that's happening is like their stock, at least briefly, traded below net asset value. The whole point of Strategy was like paying a premium to own Strategy because they were doing something that made their pot of Bitcoins more valuable than just the pot of Bitcoins. And now the market has completely moved away from that. And now they trade at roughly or even a little below the value of their Bitcoins.
I'm actually scared to check where Bitcoin is right now. When we stepped into this recording, it was down like 10% on the day, I think
It was like at $65,000.
Yeah. Yeah.
Which is down like, it's been a bloodbath. And like part of what's happening, there's reporting of like, forced deleveraging or whatever. But one thing that's happening is like a big chunk of Bitcoin is held by Strategy particularly and DATs in general. Mm-hmm. And you do wonder what will happen with those, right? I mean,
I do wonder. Like, can you tell me?
Well, so like, for instance, the DAT that I wrote about this week that faced an activist is a Bitcoin one called Empery. And it has announced that it'll either borrow money or sell Bitcoin, but it might sell Bitcoin to buy back stock. I think selling Bitcoin to buy back stock, if you're a DAT that trades at a discount, is just like a straightforwardly good trade. Mm-hmm. And then like you have Strategy, which is enormous and has huge cash obligations, to pay preferred dividends and stuff because it's taken out all this debt and preferred stock to buy Bitcoin. How will they fund that? Well, if their stock trades at a premium to its underlying asset value, then they should sell stock to fund that stuff, which is embarrassing, but fine. If the stock trades at a discount, I mean, they've sometimes said they might sell Bitcoin and sometimes said they won't. Mm-hmm. But like if your stock is trading at a discount and you need cash to pay your debt, like maybe you sell some Bitcoin. And then like is every DAT, that probably provided a lot of buying pressure on the way up, are they providing selling pressure on the way down?
Well, that's the thing. I feel like if a DAT such as Strategy came out and sold even like a really insignificant amount of Bitcoin, like what that would mean for sentiment would be crazy.
It's not good. It's potentially a lot of actual volume, but as a sentiment matter, it's not great.
Yeah. I would love if Boaz Weinstein started dabbling in a little bit of DAT activism. Doesn't it make sense for Boaz to do that?
It's the same trade. Yeah, it's closed-end fund activism. It's the same trade.
I'm going to send him this podcast.
All right. I think that one thing that Boaz Weinstein has done is he's tilted at funds run by companies like BlackRock, where BlackRock for a long time has like talked a lot about good governance. And Boaz has kind of used those words against them and said, like, you're not doing good governance. You're like stifling shareholders in your closed-end funds. I think your like moral and political playbook would be different with a DAT because like they don't care about shareholder governance.
Sailor's
it's
just
something else, right?
Post some AI generated
right.
image.
It's some
like
other
him on an orange bowl.
Your rhetoric is different when you're taking on a DAT CEO, but like
he should still.
But
do
the
it.
trade is the economics of the trade are the same. Speaking of bad for sentiment, should we talk about the SaaS apocalypse?
Oh my God. Yeah. I mean, software's dead. I didn't know that until this week. Apparently,
it's
this
so
is the
weird.
week
This
that
is the week that software
died.
died. I know.
I mean, I guess it was theoretically started by Anthropic, I believe it was, coming out with some tool for lawyers.
There's like some catalyst moment, but it's just been like a drumbeat of like AI doing stuff that used to be sort of hard specialized. It's like the thing people used to say about like Google and Apple that like you thought you'd built a business, but actually you built like a button, you know, like it turns out that a lot of like business to business software is a thing that AI can either replicate, you know, individually for each company or just like, you know, do the functions of.
Mm-hmm.
And so there's a lot of worry about a lot of software as a service companies that they might not be competitive in a world of AI.
Yeah, which I get.
Yeah.
You know, like that's a real fear. Can you talk to me about the private equity angle? Because that's been the other thing. BDCs have been absolutely in the toilet amidst this SaaS apocalypse.
Yeah, because like for a while, SaaS seemed like a really good business where you sell software to companies, you charge them a recurring license. And so you had this really good, stable cash flow. And when you have a business with really good, stable cash flow, what happens is private equity wants to buy it and they want to lever it up because stable cash flows are good for servicing debt and becoming good private equity businesses. And then you have this problem where private equity and private credit, which like provides the leverage, are overweight sort of SaaS companies because they're the safe companies. And then it turns out they're not safe. Like
foolish.
All of this stuff that is, you know, was meant to be like sort of safe, stable, recurring revenue, like conservative investments now turns out to be kind of risky, right? The Bloomberg story about this says that software is the largest sector exposure for BDCs. So like private credit business development companies, it's around 20% of portfolios, right? Because if you're like a private credit lender, like you're underwriting weird companies, like you're underwriting buyouts and you're like, oh, this company like, you know, can show me their contracts where they have like all this like very stable recurring revenue. And so you're happy to underwrite that and have it in your portfolio. And now it maybe is not that stable.
Well, on that 20% figure, I think that came from Barclays. The story also points out that it's possible / maybe probable that it's higher than that because you think about, and this is a quote from an analyst at Raymond James, if your software business is in healthcare, the fund classifies it as a healthcare exposure. The software exposure is meaningfully higher than it looks.
Yeah.
So.
Right. Because like every business is a software business, right? Like,
it's kind of been where the tide has been going over the past however many decades.
Right. It's not software, right? It's like how much of like all of business will be eaten by AI, right? How many businesses will become irrelevant, right? I mean, we've talked about like consulting and investment banking, right?
Yeah.
And certainly journalism, right?
Certainly.
All these things, right? And so like a lot of businesses these days are more or less software businesses. And to the extent they're put out of business by AI, then that'll be bad for their shareholders and lenders, right? Like,
yeah.
I don't know. Like,
I have to say,
this is kind of like the AI thing that people were warning about, right?
Yeah,
like,
the existential. Oh my God.
Yeah.
I have to say, it's interesting. I mean, the story on the terminal, which is great, private equity's giant software bet has been upended by AI. It points out that some firms have hired consultants to check their portfolios for businesses that could be vulnerable.
They don't know, man.
But also they could just ask
consultants are like me. It's me. I'm vulnerable.
They could ask ChatGPT to do that analysis for them. Also, they've been, I mean, private credit in particular has been, you know, funding the AI build out.
Sure.
Like the
They're
AI,
hedging their bets.
the AI isn't
like, one of these things will work out.
But it's not a new concept to them. It's just weird that it seems like the way that the market is now positing that, you know, none of these alternative asset managers have questions whether or not their holdings are maybe vulnerable?
I think that like people have differing views on the time frame of like AI disrupting every industry, right?
Yeah.
The thing that happened this week is like particular cloud products are introduced that look like they're further ahead than people thought and that they could replace stuff faster than people thought. I think people had a mindset of like, we are financing this huge data center build out so that in X years, AI will eat the world, right? Mm-hmm. And like for the next few years, nothing will be eaten, right? And it's like, oh, things might get eaten faster.
Sooner than you think.
Yeah. Also, by the way, if your conclusion from this week is AI has actually already completely eaten all of the software sector, then like maybe you could slow the data center build out because you've accomplished a lot with the data centers we have.
Yeah, maybe we are overbuilding.
That could be a takeaway. I don't think that's the main takeaway here.
Everyone's too busy selling
software companies.
Yeah. So Ares and Blue Owl and also a whole host of these other BDCs that are just getting crushed did report earnings. And Ares CEO made the point that only about 9% of Ares' loan assets were to software firms. So everyone's coming out and trying to say that their actual risk here is pretty low. It is interesting that this just feels like a very much let's just throw out the whole bathtub, all the babies, put them in it, and let's throw it out the window.
Yeah. I mean, one thing we've talked about and I've written about a lot is private credit is structurally a pretty safe business, right? Like structurally, it's pretty safe, right?
Go on.
Nothing's perfect, right? But they have equity funding, they have long-term funding. They don't... They don't have maybe quite the mark-to-market discipline that some other investment firms might have. Mm-hmm. And so it is true that like if there is a 3-week panic about software and then everyone's like, actually, we overreacted, the private credit firms can really ride that out like quite easily, right?
Yeah.
Like the BDC stock price goes down, comes back up. Yeah. There's no like run on banks, right? There's no like loss of funding. Probably. So this is just like try to manage perception and tough it out, right? Now it could change, right? But like for now, it's a fairly safe funding model. But at the end of the day, the loans either pay off or they don't, right? So,
yeah.
Like it's a safe funding model and it seems like SaaS companies should be a fairly safe credit to invest in. But if that turns out to be wrong, it's bad.
Well, there's a whole bunch of them on sale right now.
Yeah.
So go nuts.
You definitely want. And that was the Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on the close between 3 and 5 p.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question and we might answer it on the air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff Podcast is produced by Anna Mazarakis, Moses Andam, and Alexis Hott.
Our theme music was composed by Blake Maples.
Amy Keene is our executive producer. Thanks for listening to the Money Stuff Podcast. We'll be back next week with more stuff.